Hi, and welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So in today's lesson, I want to revisit the moving averages, and I want to talk about how I use the 18 MA in multiple time frames. And my typical look is an 18 and a 40. I'm not trying to recommend that you don't use the 40. But I do think it's worthwhile every now and again to have a different look. And I'm going to give you two different versions of this that I think can be helpful. Let's go ahead and get into the agenda. So yeah, I want to look at the 18 MA in multiple time frames and explain to you why it's so valuable to me. And then I want to also give you a better understanding as to why over the years I've used fewer and fewer trend lines. And then after we go through that, I'm going to go through the stock analysis on the symbols that came through. So let's go ahead and get into the lesson. Okay, so I got my standard setup here with my 4 time frames: monthly, weekly, daily, and in the upper left, an hourly chart. Just gives a great view when I pull up an individual stock or a market to see what's really taking place. And I urge you over time, if you can get this set up on ACP where you can look at all 4 time frames at the same time, I really believe that it'll take you to another level. With that said, now I've got all the information that I like to look at. I've got my 18 and the 40, both moving averages up. I even have a little 4 on there, which acts as a 18 on the minor time frame, on the lower time frame. So it would be like the 18 on the hourly if I have a 4 on here. So I like to have that. I've got the MACD, I've got the ADX using my 13 and 8 settings, and then I've got volume. So it's kind of everything on one chart, and then obviously doing it in all 4 time frames. You get a lot of information looking at it this way. But what I want to do today is really strip it down, because I really believe if you want to go to another level in terms of using multiple time frames, you need to understand this one concept. So I'm switching this to a different, I have another layout, which is just the 18s. I do have the volume at the bottom, but really I just have price in the 18, same 4 time frames. And if you notice, it's a lot cleaner look. And when I'm starting a coaching program with someone and we're starting out, I'll usually start with these 4 charts looking this way, because I want to start from here so that you have a clear understanding of why we use multiple time frames, number one, why we start with the bigger time frames first, and then also why if you understand the slope of the moving average, it can give you a big advantage. So let's go ahead and just start talking about this. If you see what's going on the monthly chart, we're pulling back to a rising 18 month. So on this time frame, I've got a price above a rising 18 month. And when I look at that, generally speaking, I can just see this one line and I can say, you know what, the trend is to the upside. Price is respecting this 18 month line, and that's the slope of that line is positive. If we go to the weekly chart, notice what's taken place, because starting especially last year, but even before that, we had an upturn in the moving average. It went from down to up, and then we started to respect this line. And see how many times we respected this line last year? We didn't quite make it there. We made it there, respected it again here, respected it again here. And then to start the year, we failed at this weekly line. So I mean, this has been an incredibly important line. I would argue that it's been the most important moving average line. Now, if you want to use a 20 instead of an 18, it's absolutely fine. If you throw a 20 on there and an 18 at the same time, they're virtually the same. It's not a big deal. If you have more of an interest in that, I'm totally fine with it. But somewhere around 18 to 21 is a great time frame to give you a feel for what the trend is in that individual time. In that individual time frame. So now notice what's happened on the daily chart. We had a trend to the downside where we're making lower highs and lower lows. And we did overrun that 18, but that 18 continued to decline. So we never had a true kind of reversal on that trend. Then we failed coming back down, failed at it again, failed here. And now when we turn back up to the upside, the moving average turned back to the upside here. and price moved up pretty dramatically, and got this 18 to start rising, but we never had a true test of the line. That would be where we hold the line and turn up from it. So that would be, almost like a failure pattern where you go up and instead of holding the line, you fail at it. Okay. Now, what I think is valuable, if we look at where this was here and rallying up, it was actually rallying into the 18-week, which was now declining. Okay. So if I'm looking at it, I've got this 18-month that's rising and price was coming down here. But what we didn't see, even though this had turned down, what we didn't see was the 18 underneath, this longer term 18, providing support for a rally. So I like to call it like 18 pinball, because price will just pinball and bounce around between these time frames. And if you notice what happened when it broke the 18 to the here, and then this moving average on the daily chart actually rolled over, it rallied up to it and failed. And so, and then we can go down to the hourly chart and you can see the trend was trying to be up, but then we turned down. And then look at what just happened recently with a break of this line and a rally back up to it, and then a failure at the line, and now we've turned back down. So each of these time frames seems to provide some pretty helpful tools. So the reason why I don't necessarily draw in, I used to draw in thousands of trend lines on everything, but I've found that if I have a trend line in and the 18, notice how they're approximately the same. Okay, so I can look at that. Now, we had these deep pullbacks in this time frame, so don't really have that, but clearly we had a trend line in place last year, and look at where the trend line broke was right at where the 18 was breaking. We can throw this trend line in here, and generally speaking, when we break the trend line, we're basically breaking the 18 to the upside that happened in the same day. So I think it's incredibly valuable if you go through and you start putting trend lines in, and you notice, I would say 80 to 90% of the time, the trend line and the 18 are going to match up. That tells me that's pretty strong proof that this moving average is providing incredible helpful tool at determining what the trend is. Now, I love to use the 18 and the 40 together as a buddy system. And the reason why I like to do that is if I know the 40 is rising underneath, I've got this kind of, even though we might break the 40 in a small way, I know I've almost got this extra support underneath. And it also tells me when they're running at about the same rate how strong the trend is. It's not a climatic type of a move, and it's not losing momentum. So if this line is moving up faster than this line, then I know that we're probably starting to lose some momentum. So it's just nice to have that line underneath. But I want you to think about it in these terms. I want you to think about it in terms of saying, okay, if I'm pulling back to an 18 on one time frame, it's hard for me to get bullish until we get back above this moving average and it starts to flatten out, cup around, and maybe even be tested like that. And I'm not even looking at the 40 when I do this. This is the reason why I wanted to do this. Sometimes when you have the two moving averages up, you get a little confused if the 40 looks like that. And I'm seeing the 18 crossed over and turning. That is a lot more valuable to me than what the 40 is doing in this instance, because we have multiple time frame analysis going on. If I were just going to use one time frame, then the 18 and the 40 together would be pretty valuable. But if I know I'm using multiple time frames, then I want to be able to look at where the 18 is on one time frame and use it in conjunction with the next time frame. Again, look at where we were here on this rally. This rally up to the declining 18, which it did exceed by a little bit, but then came down below. And look at what happened. We had two consecutive time frames where price was failing at a declining 18 MA. You see that? We were close proximity to the 18 and both of them were failing. That is a very high quality signal when you can get two consecutive time frames doing that. So I want you to think in these terms. The 18 is the driver for my approach. It is the driver. It is the one that's going to give us the earlier signals. The 40 is going to give us much more confirming signals. And when I'm looking at a trend and I want to buy pullbacks, I do want to see the look of what the 40 looks like in conjunction with the 18. But the reality is I want to see, and when I'm looking at signals, when I'm using multiple time frames, like if I have an uptrend on one time frame and a downtrend on the other, I'm really leaning on the 18s to make the determination of what I'm trying to do, okay? The 40 will almost act as a trigger, but the 18 is acting more in terms of telling me what the trend is for that time frame. So very, very valuable tool and something I want you to think about. One last thing I'm going to bring up is that I've got a daily chart here, and I've got the 18 MA up. I've got a 90, which is if you take 18 times 5, that would be a 90 MA. Okay, and 5 days makes up a week. So this grayish line here is the 18 week. And this is all on one chart now. So I've got a daily chart with an 18, and now I've got a daily chart with an 18 week. And then I multiply it times 360, or I get 360 when I multiply 18 times 20 trading days, I get 360. Now I have an 18 month on here. So in one time frame, I've got what I call a timeline chart, right? I've got an 18 MA, a daily, I've got an 18 week, and I've got an 18 month. And it gives me a really good feel for what is going on. We can see the minor breaks of the 18 day, but notice how we were respecting the 18 week up until the beginning of this year, and then the 18 day crossed down through the 40, it crossed down through the 18 week. And then the 18 week failed. Notice how we were finding support at this line, and now all of a sudden we get the line to roll over and it fails, comes down quickly and finds support at the 18 month line, bounces off that, gets through the 18 day, tries to get through the 18 week, but this line is still declining, and then we come back down, and then you can see the two lines together. Now we're coming back down to test the 18 month. We're at a really critical zone with prior support and this 18 month line. So another way to look at it, if you like to look at one chart and you don't want to have the multiple time frames up, this can be a pretty valuable tool. But I really encourage you, especially with all the indicators, to have all 4 time frames up at the same time. You will start to get a feel for how to use multiple time frame confluence, and I think it'll be incredibly valuable to you as you start to learn more and more of these lessons and how to incorporate all these individual tools. All right, let's go ahead and get into the analysis now. Just briefly, my services can be found at RabilStockResearch.com. I send out about 2 to 3 reports each week, plus a special video for the individual package. If you have an interest in trying it out, you can use this coupon code StockTalk and get the first 2 months for $50. Let's go ahead and get into the analysis now. As we start the analysis, let me go ahead and just follow through on this SPX. I'm now Thursday morning looking at these charts as the market is trying to rally. And let's go ahead and look at what we just discussed. I've got the 4 time frames up. The one thing that stands out to me is that we've come down into this prior area support zone, which is back to the 18 month again. Okay. Now the momentum conditions aren't great. Notice how red DI is causing the ADX to go up here, and notice how the ADX is pretty strong on this time frame. Both MACD lines on these 2 time frames are not very good. We got a downside crossover extended away from the 0 line on this time frame on the monthly. So, we've got some issues down here in terms of the momentum, but we're stretched away from the 18 day. And so this market might try and just fill in a little bit. You can see that we're trying to get back above the 18 on the hourly, but we've gapped up this morning and we're already kind of back below it. So I would say this 4250 area is probably pretty important for the short term. I think if we can get back above that and see this line turn up, then we have the potential for a little bit of a rally. But look at these 2 big important lines turning down on top. So I would view this more like a short-term rally right now based on the momentum conditions. I don't know that I would get too excited about this yet. I think it's way too early. at this point. Okay, let's go ahead and get into the stocks. Now, I decided to throw in the FB just because of the big gap up, because I wanted to give a quick update on this. Now, we got stretched away on the monthly chart. Look at how far away it was. The 18-month line is up almost at 300, and price was down coming into this earnings was down around 170 or so, and it was into this kind of big pool here. And no real definitive level, but kind of getting into some support. So a rally makes sense to me. But I mean, if we just do our standard work here, we've got a declining 18-week, we've got a declining 18-day, and in fact, the rally today went up and hit the 18 and the 40 so far. At least the high of the day this morning is those two lines, and it looks like it's failing at it. So we don't have anything to really hang our hat on in this yet. I mean, I think it's more of a trading move until we can get through this 18 and 40 on a daily chart. I really want to see the daily 18 start to cup around and improve before we can really expect anything meaningful here. Now, we did have a little bit of divergence, so maybe this wants to pop a little bit higher. Maybe it's going to get through these moving averages and work its way up towards this resistance up here. Certainly a possibility, but in terms of getting a hold of something that has a real potential to the upside, I don't see it yet in this one. Okay, let's start going through some of these stocks. So IBM is trying to turn around, but we got to be careful here because it's a stock that has really tried and failed a number of times over the last several years. So I think this 150 area is incredibly important. Until we see strength through 150, now that we've tested the low and held, we've got, a higher bottom. Let's make a higher high now. We haven't really done that. Every time we've gotten through, this one time it got through 150, kind of got its head lopped off and it ended up selling off again. So we need to get through 150 and maybe on a weekly closing basis, preferably with some improving momentum. The improving momentum is only taking place on the daily chart right now. I don't have a problem if you wanted to do a little probe in this, but don't go crazy until we get through 150. Okay, a couple of Canadian stocks came through. So this Knight Therapeutics, forming a pretty good base here on the weekly chart, but notice this big, let's just zero in on this. Look at this big red bar, okay? So at a minimum, I want to see the midpoint of that red bar, which is essentially getting back up above the 18-week, would be kind of like the minimum. But if you look at this, see how this has gone sideways? We really need to see these highs exceeded before we can expect anything meaningful. I would tell you that when you have a big red bar down that has no follow-through, and then we come back up and exceed the midpoint of that bar, that's usually a pretty good sign that the momentum to the downside is waning. So, that is an encouraging sign, but we haven't actually exceeded that midpoint. I think it's probably around 5.25, something like that. So we can look at Block, SQ, and it has a lot of the similar characteristics as Meta, the FB. It's getting very oversold versus its 18-month. It's coming down into a support zone. I mean, this is an area where, I could see some kind of a rally take place. But it's still early. We're still below a declining 18-week. We're still below the declining 18-day. And I'd be thinking more in terms of looking for this to form a saucer pattern rather than a V. Okay, I think a lot of these tech stocks have been hit in a way this time that the big buy on weakness and it turns on a dime and it keeps going, I think is going to be very difficult to do. I think looking for a basing pattern to develop, and if 150 ends up being key and we keep working sideways and then we finally break out of that sideways line, getting through 150 down the road, that could be a little bit more intriguing. Right now, I see this as trading plays only. Not that there's any problem with that. I'm just saying if you're looking to get in something that you want to be in for a little while, I think it's too early. Now, Delta has actually started to show signs of life again. It's breaking this downtrend line, getting back above the 18, and the 18 is turning up on the weekly chart, okay? Notice the improving momentum conditions and price action that's taking place on the daily. Now, I would expect if you, let's just zero in on this weekly. Notice how this has poked its head here, poked its head here, poked its head here, and then did it again here. I mean, we've got some resistance in the mid 40s. I'd feel a little bit better if we got through that, especially based on the fact that the MACD and the signal line really aren't completely through the zero line here, and we don't have that much strength on an ADX basis yet. Green's trying to get going, but it hasn't taken over red yet. So I mean, there's signs of improvement here. It's a stock that I'd probably start to keep on a watch list, but it's still on the early side until we can get through the mid 40 area. Royal Bank of Canada. So it's working its way back to the 18-month. I mean, the momentum conditions on that are good. And if we look at the way this is pulling back and correcting, there really isn't that strong a selling taking place at this point. The problem I've got with it is it's early. We've got an 18 on the weekly that's just rolling over right now, and it's probably going to take a little bit of time. I don't think there's a whole lot of downside risk in this now, but in terms of looking for a potential upside, I think it's going to take a little bit of work, probably a couple months for it to stabilize and then turn the corner back to the upside. One more Canadian, Enbridge. Now, if you notice here, look at the strength on the monthly chart. You see how this had this really nice leg to the upside. It actually had a little interim pullback and then took off again. And we're starting to see green DI improve. I like the volume action on the monthly as well. There's green starting to show pretty decent signs of improvement. So that's a nice backdrop to have. The longer term picture is definitely improving. In terms of this pullback, we're coming back to the 18-week, but we did it via a gap. We showed a little bit of momentum here to the downside. And so, I mean, again, I don't need to make a decision on this because right now I've got a declining 18-day. I know I'm back to this 18-week. And I know I like the longer term picture, but I'm a little bit separated away from this line. So got to be a little careful. But one thing I'm just waiting for is for this to start turning this 18-day and showing signs of improvement from that standpoint. Then I might feel a lot more confident about what's going on here. So ALKS, trying to turn the corner, so look at the weekly. Look at this big red bar. You see this monster red bar, and we got through the midpoint of that, and now we've worked our way up, and we've actually exceeded the high of that bar, but we're coming into this resistance. I think we expended a lot of energy to get through this little area here, which was pretty good resistance. And the stock today is actually got a pretty big gap up that's giving it up right now. So I just think there's still too much problems up in the 32, 32.5, 33 zone right now to expect this to break out. Look for more sideways action. I mean, the longer term pattern really doesn't look bad at all. Maybe if this can come back and test the 18-week or work sideways for a little bit and let the 18-week catch up, then we might have created enough energy to get through this resistance zone. But I don't think it's ready to do it right now. CASY's General Store. So if we go and look at this 18-month and 40-month, you see how they're still rising? Even though we had a pretty deep pullback to the 40, both lines remained rising during that period. And so I would still consider that time frame in an uptrend. Now notice how this 18, which was declining since about a year ago, it turned down, and now all of a sudden it's turning up. What's missing is a test of this line. If this can kind of cup around, if this can kind of pull back and hold this line, which is now cupping around to the upside, I think this would be pretty attractive if it played out that way. We had a little bit of selling based on the ADX rally, based on the red. So I wouldn't be in a huge hurry to buy this first pullback. Okay, we got MACD overrunning the signal line. It probably wants to spend a little time consolidating, but there should be a significant amount of support around 200 in this. So got a question on this in terms of entry. We have a low ADX pattern. So we have low ADX on the monthly, holding the 18-month. We have a low ADX on the weekly, holding the 18-day on the weekly chart. Notice how it's holding the 18-week, and that line is starting to turn up. And now we're trying to break out to the upside, and we have green taking over red. And notice how it also is making a little hitch above 25. So I think that's a pretty good sign. The question was, is the breakout above this high here, this prior high, the trigger? And I would say that's probably the case. Now, if we had a little bit more room and you had a higher pivot low, meaning we closed above the low of the pullback, closed above the low bar of the pullback, then you could consider buying ahead of taking out this high, because green did take over red here. But in this case, because it's so close, I would probably wait for that to be exceeded to use that as a trigger. SkyWest. So this is another question based on the short side. Okay, so let's just look at this from a short standpoint. We had a pretty nice leg to the downside with good momentum, and we've rallied back to a declining 18-week. There's a couple of little caveats here. So number one, see how far we are from the 18-month, and we're coming back down into some decent support down here, probably in the, probably more like really where this low is here, around 25. So just something you want to kind of recognize. Now, that wouldn't prevent me from putting the trade on, but what I would be looking to do, because we had some green show up here, I would be drawing in a trend line here. And then actually in this situation, I would not take the break of the 40 because there's not enough room to what could end up being the potential target here. Let's zoom in on this. It's a little too close to the lows to just take a break of the 40. So I would probably be looking for a pinch to develop. Now that the MACD is crossed down, see if this can rally up a day or two and set up a pinch play. And then all of a sudden, we've got a much better risk reward down to this area. Now, even if it exceeds that low, we can still make money taking a target down there and then seeing if it wants to break down. But if we do it on a break, a close below the 40, I just don't think there's enough room from a risk reward standpoint to make it make sense. Hope you enjoyed the show. If you have a stock that you want to have analyzed on the show, send it to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.